The ink is still wet on the final page of a 30-year contract. You're standing on a manicured lawn, the weight of a small brass key resting in your palm. It feels cold. It feels significant. To the rest of the world, this is the moment you've arrived. You've successfully navigated the labyrinth of modern adulthood and emerged with the ultimate trophy, a primary residence. Your parents call it an achievement. The bank calls it an asset. The neighborhood calls you a peer. But as the sun sets over the quiet cul-de-sac, casting long, skeletal shadows across your new driveway, a quiet, intrusive realization begins to stir in the back of your mind. You didn't just buy a home. You just signed the ledger for a 30-year obligation to remain exactly who you are right now. You've anchored yourself to a specific geographic coordinate, a specific tax bracket, and a specific career path. The key doesn't feel like a tool for a door anymore. It feels like a shackle. You are now a permanent resident of a system that thrives on your immobility. We are told that renting is throwing money away. We are told that homeownership is the only true path to middle-class stability. It is the cornerstone of the American dream, a dream so pervasive that we stop questioning the architecture behind it. We treat it as a biological necessity like water or air. But when you strip away the sentimentality, the white picket fences, and the nostalgia of the 1950s, you are left with a cold, clinical deception. You are looking at a mechanism designed to extract 3 decades of your most productive labor in exchange for a stationary box of wood and concrete. It is a social contract designed to keep the wheels of the economy turning at the expense of your personal velocity. Today, we are performing a forensic autopsy on that dream. We are going to look at the friction, the hidden math, and the psychological mirage that transforms a shelter into a cage. This is not a guide on real estate. This is an investigation into why you were encouraged to build your own cell. Welcome to the $500,000 prison. To understand the prison, we must first look at the jailer. The bank does not want you to be wealthy. The bank wants you to be predictable. When you sign that mortgage, you aren't just borrowing currency. You are selling your future. This is the interest illusion. Let's perform a clinical dissection of a standard $500,000 mortgage at a 6.5% interest rate. On paper, you bought a $500,000 house. In reality, over 30 years, you will pay the bank approximately $1.137 million. Think about that number. For every dollar of house you own, you are paying the bank $1.127 in interest. You are buying one house for yourself and 1.25 houses for the shareholders of a financial institution. The first decade of your ownership is a performance of futility. In year 1, nearly 80% of your monthly payment goes toward interest. You aren't building equity, you are paying a subscription fee to live in a house you don't yet own. You are working 40 hours a week, but 32 of those hours are dedicated solely to increasing the bank's quarterly profits. You are a tenant with a much more expensive contract and a much heavier responsibility for the plumbing. Now, let's look at the unseen ledger. The housing industry relies on appreciation as its primary marketing tool. My house doubled in value over 20 years, the everyman says proudly. But this is a mirage born of incomplete accounting. We must account for the friction of existence. Let's look at the 1% rule. A house is a biological entity. It is constantly decaying. The roof is sun-bleached, the pipes are corroding, the foundation is shifting. On a $500,000 home, you should expect to spend $5,000 a year just to maintain the status quo. Over 20 years, that is $100,000. Add in property taxes, which average 1.2% nationally, and you've spent another $120,000. Add in insurance. Add in the respectability tax, the money spent on landscaping and furniture to ensure the neighbors don't look down on you. When you finally sell that house for $900,000, you earn up $400,000. Once you subtract the $600,000 in interest and the $250,000 in holding costs, your real inflation-adjusted return is often deep in the red. You didn't buy an investment. You bought a high-maintenance savings account that charges you for the privilege of holding your money. But the math is only half of the deception. The true cost is the mobility tax. Imagine 2 characters, the renter and the owner. The renter receives a job offer in a new city, a $30,000 raise, and a chance to lead a new department. They pack a suitcase, break a lease for a small fee, and pivot within 30 days. Their career velocity is unhindered. The owner receives the same offer, but they are anchored. To move, they must sell. They must pay 6% in realtor commissions, that's $30,000 gone instantly. They must navigate closing costs, inspections, and the buyer's market. The owner often stays put. They convince themselves that stability is more important than growth. But stability in a changing economy is just another word for stagnation. The bank didn't just sell you a home. They bought your ability to quit. They bought your ambition. They turned you into a stationary unit of production that is easier to track, easier to tax, and easier to control. The mortgage is not a bridge to wealth. It is a weight that ensures you stay in your lane. Why is this trap so effective? Why do we walk into the cage willingly, smiling for the sold sign photo? Because the $500,000 prison isn't just built of brick and mortar, it's built of identity. We are biological creatures designed to seek territory. For our ancestors, a secure cave meant survival. Today, the dream home is the modern version of that cave, but it has been weaponized by the system. The deception works because it links your self-worth to your zip code. Consider the respectability trap. We buy houses to signal to the tribe that we have won the game of life. We spend money we don't have on square footage we don't need to impress people who are too busy worrying about their own interest rates to notice. We've been convinced that renting is for the transient, the young, or the unsuccessful. We call it settling down, as if life is a liquid that needs to be poured into a mold to have any value. But look at the word settle. To settle is to stop. To settle is to accept the current state as the final state. The system understands that a man with a 30-year debt is a man who will not cause trouble. He will not strike. He will not protest. He will not take risks. He will show up to a job he hates on a Tuesday morning because the alternative is losing the dream. The mortgage is the ultimate tool of social engineering. It creates a population that is all in on the status quo. If you own nothing, you have nothing to lose, and a man with nothing to lose is dangerous to the architecture of power. But a man with a 30-year anchor, he is predictable. He is manageable. He is a good citizen. So, how do you escape a prison that has no bars? How do you regain your velocity in a world designed to slow you down? The exit isn't a different way to invest. It's a change in identity. First, we must perform a strategic decoupling. You must decouple your shelter from your wealth. A house is a service. It is a utility. It provides warmth, safety, and a place to sleep. It is a lifestyle expense, like a car or a vacation. If you want a garden for your children, buy it, but do it with the clinical understanding that you are buying a luxury, not a profit center. You are paying for a feeling, not an asset. When you stop expecting your house to save you, you gain the clarity to put your capital where it actually grows. Real wealth is found in liquidity and optionality. Optionality is the ability to say no. It is having your capital in assets that don't require a lawnmower, a tax assessment, or a 6% realtor fee to liquidate. Is the ability to change your life in a weekend. In an era of AI, global shifts, and total economic volatility, the most valuable asset you own is not a deed, it is your velocity. If you already own the prison, don't panic. But stop feeding the illusion. Stop pouring your excess capital into renovations that are merely cosmetic attempts to justify your stay. Start building an escape fund, a liquid pool of capital that serves you, not the bank. Prioritize the ability to move over the ability to own. The American dream was written in a different century for a different economy. It was written for a world where people stayed in one company for 40 years and retired with a gold watch. That world is dead. The new dream isn't about owning a piece of the ground, it's about owning your time. It's about being the architect of your own days, rather than the janitor of a bank's collateral. The prison is only as strong as your belief in the dream. You were told that settling down was the goal, but in a world that never stops moving, settling down is just a slower way of sinking. Once you kill the dream, you finally have the clarity to build a reality